Hello and welcome to another video by TradingTraders.com. Today we're going to look at two separate sentiment-based trading indicators that locate opportunities within the emotionally charged Forex markets. In this chart we have the cable or the pound dollar on a daily time frame, and the indicator that we have attached to this chart is the greed indicator. You can see that it fires off a clear and simple signal to buy at 1.5938 and a half, and it fires off a clear and simple signal to exit at 1.6148 9/10. The ability to do this, to get the trader into the market as momentum is picking up, represents greed. Traders get greedy, they start really pounding the Forex markets, and you can see this massive move was caught by our indicator. Also, just as importantly, it tells you when to get out. It senses that momentum is waning, and as such, that it may be time to collect profits. This all works seamlessly under the hood, and you don't need to know anything as far as the Forex markets other than it is a fear and greed driven market like all financial markets. This simply picks up on when a lot of people are starting to push volume higher, push the markets higher, and start to get greedy. There does come a time, every trend does this, where we pull back, and the idea of our indicator is to maximize your profits by telling you when to get out, as opposed to either taking profits far too early or far too late as we drift much lower. As you can see, the trader really only needed to follow the signals, and the profits came. The fear indicator works the same way, it's just in reverse. Now, this chart actually has two different indicators on it. It has the greed indicator, as you can see, fired off a buy signal back here, but the fear indicator is here, and it looks the same. They work seamlessly together. You don't need to know the difference. They both flash the same signals, or same types of signals, and tell you when the market is ripe for either a fall or a rise. As you can see on this particular trade, momentum had been broken. It's obvious that we had been rising and we had smashed through that. But having said that, you have to question whether or not it's a pullback or some type of trend reversal in the short term. Well, the algorithm measures the velocity and the momentum and figures that there is plenty of selling, which means plenty of fear in the market. And you can see that's exactly what happened. We went sideways for a little bit, but you got in on this trade long before this massive fall, this big huge gap from the weekend. And the beauty is you also got out and got to keep most of the profits. Now, since then, the market has trended lower, but you can see these are choppier candles, and as such, the algorithm isn't interested in that. It looks for momentum shifting in the market, which is based on trader psychology. Those are when the big moves are. You could trade like this, but it's essentially a lot of back and forth and a lot more stress than is necessary. The real money is made on the breakouts, and that's exactly what fear and greed indicators measure. They measure when the sentiment shifts, and once sentiment shifts, so does a trend, or it continues depending on the direction. Again, really all the trader had to do in this particular circumstance is follow the signals and collect the profits.